Hi, I'm Ashikur Rahman from Accounting Celebrity. Welcome to my channel where I upload several accounting tutorials weekly only for you. Today in this lesson, I'm going to show you how to prepare a provision for depreciation account. So let's get started. Okay, here we have some specific items to be entered in this account. To prepare this account, we will follow 3 steps. Okay, on the first step, we will record the balance of provision account on the credit side. Okay, so here on the credit side. Why? Because the provision for depreciation account has credit balance. It comes on the credit side of trial balance. Okay, so we will enter on the credit side. Okay, on the second step, we will record the depreciation of disposed asset on the debit side. Okay, so here we have to calculate the depreciation of the asset which is being disposed, and that value, the value of depreciation, we will record on the debit side. Okay, so here on the third step, we'll write the depreciation of current year. Okay, current financial year of the asset will be recorded on the credit side as income statement, because this value of depreciation will come on the expense section of income statement. Okay, so we will write here income statement. So here depreciation of disposed asset. What is the double entry here? The provision for depreciation account to be debited and disposal account to be credited. Okay, so here we are doing provision for depreciation account. It is debited. That is the reason we will record in the debit side. Here depreciation of asset for current financial year. Okay, so here the income statement to be debited and provision for depreciation account to be credited. Here provision for depreciation account to be credited, so we will write income statement on the credit side. Okay, very simple. Now I'll show you an example. So let us have a look at the question on the screen. So Yusuf Rahman is a business consultant. Okay, his financial year ends on 31st March 2021. Okay, so point to be noted. So financial year ends on 31st March. Yeah, so 31st March 2021. So year start is here 1st April 2020. Okay, remember this date. This is very important, and this will be needed when you calculate depreciation for this current year. Okay, Yusuf Rahman depreciates his office equipment by 20% per annum on cost. Okay, so 20% on cost. That means here we have to follow the straight line method. So what is the rule for straight line method? Every year the amount of depreciation will be same, as we are calculating depreciation on cost. When it is reducing balance method, in this case we don't depreciate on cost, we depreciate on net book value. Yeah, but here in the question it is clearly written that depreciation will be charged on cost. Okay, so let us have a look at the question once again. Here depreciation on new office equipment is calculated from the date of purchase. Okay, no depreciation is charged in the year of disposal. Okay, so what is written then? On 1st April 2020, the balances on Yusuf Rahman books included the following. Okay, office equipment at cost 7,500. Okay, provision for depreciation of office equipment is $4,500. Okay, so value of office equipment, it will not come here, it will go to the office equipment account. Okay, so we are doing provision for depreciation account, so we have to consider only depreciation. Okay, fine. Then what is written here? On 1st October 2020, Yusuf Rahman purchased new office equipment by $3,500 by check. Okay, so here one more asset is purchased, so we have to calculate depreciation. Okay, for this new asset. Okay, then what is written? On 31st December 2020, Yusuf Rahman sold equipment on credit to AH company for $2,000. The equipment had been purchased on 1st April 2018 for $4,000. Okay, the disposed asset is purchased on 2018, but we are doing depreciation account for the year 2020-21. Okay, so accounting period is here 1st April 2020 to 31st March 2021. Okay, so now we have seen all the information here in the question. Now we will record these 3 items here in this account. Okay, so first of all we have to record the balance BD on the credit side. Okay, balance BD sometimes will be given, sometimes will not be given. Okay, if it is given you have to write, if it is not given you don't write, just ignore it. Okay, so here in this question we have balance BD. So we have the previous year provision for depreciation, which is 4,500. Okay, so the date is here written on the question 2020 and April 1st. This is the opening balance, so we will write here balance BD. Okay, so here the value is $4,500, the opening balance. Okay, so now first step is done. We recorded balance BD on the credit side. Then depreciation of disposed asset on the debit side. Okay, so here we saw that in the question. So there is an asset which is sold by $2,000 but cost price was $4,000. Okay, so when you prepare this provision for depreciation account, we do not consider the selling price of disposed asset. Okay, we will calculate depreciation on the cost price. Okay, the asset is sold by $2,000 but the cost price was $4,000 is written clearly on the question. Okay, so let us calculate depreciation for this disposed asset. So here the cost price was $1,000. So let us write here $4,000, and then this asset is purchased in 2018. It's written in the question. Okay, so 18. So we have here the rate of depreciation which is 20%. So let us write here 20% and multiply. We get here $800. As we have to calculate depreciation on cost, it is mentioned in the question. So again for 2019. We have to calculate depreciation on same way. 4,000 times 20%. Again it is 800. So if we add, it is 1,600. So now you might be thinking, why don't you calculate depreciation for 2020? For the year of disposal, we don't need to calculate depreciation. Okay, so that is the reason we don't calculate depreciation for 2020. Okay, so for these 2 years only we will calculate. So we got here 1,600. That means the depreciation for the disposed asset is 1,600. So how we record this transaction? We write disposal, okay, on the debit side. So let us write here 2020 December 31st. Okay, we will write here disposal. So the depreciation value is $1,600. So here the double entry is provision for depreciation account to be debited, disposal account to be credited. So we are doing this provision account, it is debited. That is the reason we write on the debit side. Okay, so step 2 is done. Now step 3. What? Depreciation, current year depreciation we have to record as income statement on the credit side. Okay, so this will be a bit challenging, but if you understand it will be quite easier. Okay, so let us have a look at the question once again. So here on 1st October 2020, Yusuf Rahman purchased a new equipment $3,500 by check. Okay, so this asset is purchased on 1st October. Okay, October 1st 2020. Okay, so now I'll ask you from 1st October 2020 to 31st March 2021, how many months? So if you say it is 6 months, you are correct. So how? So here 1st October it is purchased. So October, November, December, January, February and March. So it is 6 months. That means the business used this equipment for 6 months. Okay. So we have to calculate depreciation on this new asset for 6 months and old asset for 1 year. So here how to calculate depreciation for 6 months. Okay, so new equipment price is here $3,500. Okay, the rate of depreciation is 20%. Okay, 20%. So we will calculate depreciation for 6 months, multiply by 6, and we have to divide by 12 as 12 months equal to year. Okay, now if we calculate what is the value here, it is $350. Okay, so this is depreciation for new asset. So let us go to the credit side and write the date here first, 2021, here March 31st, the closing date. We will write here income statement. So here we calculated depreciation $350. So let us write here $350. Okay, great. So still one more income statement left. Why? Because we did not calculate depreciation for all asset. Okay, so the cost price of existing asset is $7,500 in the question you already saw. And from this value, dispose the part of the asset. The value, the cost value was $4,000. Okay, so let us subtract $4,000. If we subtract, what we get? We get $3,500. Okay, this is the current cost price of our old asset, old equipment. Now we have to calculate depreciation on this value. Okay, so here $3,500 times 20% on cost. In the question it is clearly written that on cost, so we have to calculate on cost. Okay, so here if we multiply by 20%, we got $700. Yeah, so this is again income statement, $700. Okay, so I showed you here separately. If you want to keep together, it is also fine, but for better understanding you can write separately. Okay, so 3 steps are done. There is nothing new here. Okay, so if you understand this question, whatever new question you get, you will be able to prepare, you will be able to calculate. Okay, so now we have to balance it. Yeah, how to balance it is very simple. So you compare these two columns, see which column is greater in terms of money. So if you see, we get the credit column is greater. Yeah, so if we add this column, we get $5,550, the addition here. Okay, so we will take this addition here on the debit side. So just transfer to the debit side. So let us write here $5,550. Okay, so here we have 1,600, only one item, one value. We have to minus this value from this total. So if we subtract, we get $3,950. Yeah. So what is this value called? This is called balance CD. Okay. The date for balance CD will be the last day of the financial year, which is 31st March 2021. Okay. So this balance CD means balance carried down will be balance brought down to the opposite side. Okay, and the date will be the first day of next financial year. Okay, which is 1st April 2021. So we will write here balance BD. The value is here same, 3950. Okay, so this is the way you have to prepare provision for depreciation. I hope next time you will have no mistake. Okay, and whatever question you see, you will be able to prepare. Okay, so if you don't understand, watch this video several times, once, twice. Try to understand all the calculations. Okay, how we did it, and we try to remember these 3 steps. Okay, then you'll be able to make entries on this account. Okay, so this is all about today's lesson. I hope you enjoyed, you understood this lesson, and please share this lesson with your friends. They will be also benefited, and you can consider subscribing to our channel because there are other so many lessons which will help you to prepare yourself to understand accounting, to learn accounting. So that is all. I'll see you soon with new video. Until then, bye bye and take care.